Welcome everybody. How y'all doing today on this wonderful Sunday? It's your boy The Fat Stacks. Welcome to the Stack House, y'all. If y'all can do me a favor before we start, hit that like button, hit that subscribe button, share the video, join your boy and spread the word, about these financial corners and everything that we doing around here. So I appreciate everybody's support. Like I said, hit that like button, hit that subscribe button. So today, as you can see on screen, we are going to be talking about some of the IPOs that have yet to come out. And two of the ones I'm particularly looking at, as you can see on the screen right now, one of them we're going to talk about is Airbnb. As you can see up on the notepad, Airbnb has definitely been hit hard with what's been going on in the world. So as y'all know what's been going on. So I'm going to try to avoid those words so I don't get so-called shadow ban, I guess. Talking about that, aka, what's been spreading all over the place these days. So we're going to be talking about these few IPOs that haven't come out yet that some people are waiting on. Me personally, there's only two that I'm particularly looking at per se. But we're gonna go over these real quick. I know everybody's had videos on them already, but I'm gonna do my piece and say my 2 cents. So when it comes to Airbnb, Airbnb has definitely been hit hard in the beginning stages, but now since their third quarter has been revealed, they haven't lost as much um, with the development of what's going on with the vaccines and recovery. There is a lot of hope into next year, maybe late next year. Things might be back on the upward trend. So, but like I said before in past videos, I believe nothing's gonna be decent till 2022. That's just my personal opinion. So with the recovery efforts next year, which probably will take the whole year for things to get settled for people, if people decide to take these vaccines, and depending, really it's going to depend on if the amount of people that take these vaccines, as well as how many vaccines are out there that you know that can be spread amongst the world. So with that being said, on you can almost gauge when certain things are going to be back on an upward trend, certain industries, that is. So, but as you see here, Airbnb plans to raise 2.5 billion with an initial public offering that will price shares in a range of $44 to $50, according to an updated filing on Tuesday. Some of this stuff is pretty old with the announcements. I just put them in there, kind of copy and paste type deal, so I can give you guys a visual see of what's going on. The main thing is Airbnb might be out either next week on the New York Stock Exchange or the week after, sometime in December. So as you can see, the third quarter revenue fell 18% to 1.3 billion with a profit of 219.3 million. This compares to the loss of 576 million in the year ago period. Now, obviously, last year, if you're doing a year over year comparison, obviously this year has been devastating to a lot of companies when it comes to the travel industry, the service industry, tourism industry. A lot of that's been hit hard. So doing a year over year comparison, I mean, every company's hurting this year in one shape or form. So the biggest bet is going to be, when things do get back to normal, how will companies perform coming out of this? And I've said this before, technology has already shifted a lot of jobs, literally, with the adjustments a lot of companies have made. A lot of companies have cut costs and gotten thinner, so to speak, so they can be ran more efficiently and save capital in certain areas if they can save it, which means that trend is not just going to go away. Actually, it's going to enable companies to even tighten their belt even more if they can cut costs. So there are a lot of jobs that's going to get lost to technology, period. Those jobs aren't coming back. So a lot of people are going to have to uh, go to different fields or get outside that box and their bubble, so to speak, and learn something different, or possibly get into technology, because obviously the newer generation is a lot more fluent in the technology versus some people from the older generations per se, because you have people that might not want to get into technology so late in their lifetime, but you might not have a choice because a lot of things are going technology based. So once again, Airbnb's 2020 seasonality was far more challenging than in previous years, obviously. For the quarter ending this June, revenue fell 72% and its losses nearly double. Obviously, that makes sense with everything that came down in March. Airbnb has lost money every year, in its cumulative losses since 2008 total 2.8 billion. Its revenue have been declining since 2020. Okay, now that is an interesting deal there. Airbnb has lost money every year, its cumulative losses since 2008. Now, as an investor, you kind of have that in the back of your mind. Like, well, when is the company going to be able to be profitable? Now, a lot of times technology companies start off losing money. Obviously, we're comparing apples to oranges here, but we're just gonna entertain the idea. A lot of software companies that usually come out and whatnot usually don't profit as quickly. Now, obviously, when it comes to Airbnb, now they've been out quite a little bit, but also they've had to be challenged dealing with other hotels, other brands, and everything like that. Now, Airbnb concept, in my opinion, is pretty solid because of that one word, which is privacy. A lot of people, when they travel, they want, if they stop at a hotel or an air versus an Airbnb, it's more about privacy. And a lot of people like that with Airbnb, you don't have to have, because with hotels, you have rooms with other people around. People might be making noise, this and that and everything else. Where in an Airbnb, you can possibly have a whole house to yourself. You know what I mean? You don't have to worry about other people, being around you. And that's a thing these days that might flood a lot more people. That and the comfortability of an Airbnb. So, in my personal opinion, Airbnb is also a worldwide deal too. With being able to go anywhere in the world and find an Airbnb that you can be possibly comfortable, and the price might be just either cheaper or equal to a hotel. So, why pay for a room in a hotel where you're going to have a whole bunch of people versus you can have your own private room in a house, or a whole house to yourself, and not have to worry about the ins and outs of a hotel or the issues with a hotel? Now, there's always give and take with either one. So it all depends on the person's personal preference. So that's how that goes. Now, when it comes to profitability, I think Airbnb has a chance in the long run to be profitable, because you might have the trend of a lot more people looking for Airbnbs if possible, or at least first. If a person can get into an Airbnb first versus a hotel, you know, more than likely that might happen down the line, just because of how people, when they travel, or how people have a sense of, man, I want a place where I can just not have people around me. You'll have people wanting to looking for an Airbnb first. Now, when it comes to the actual purchase of the stock, um, when it comes to the actual purchase of the stock, as I said before, I see no reason to rush into the shares. I think an IPO feeding frenzy will drive up the price. Lower revenues and bigger losses could be reported in the final quarter of 2020. Expiring lockup agreements could add to the stock supply, and the, as you can see what's going on in the world right now, could persist longer than people hope. And that's the thing that is crippling the tourism consumer industry right now, is that. But once that is gonna get handled with, the CDC guidelines, with the vaccines coming out, um, if there is a cumulative effort to reduce the impact of what's going on, then there might be a significant upward trend in recovery. But still, like I said, in my opinion, it nothing is going to be good until 2022. I think this whole year is going to be of recovery in vast different ways. And if the majority of the world takes these vaccines, then, and there's nothing side effect wise, nothing is crazy going on. I mean, the efficiency that I've seen between Moderna and Pfizer as well, I mean, it's pretty high. Now, I've heard a little bit of the side effects of, what can happen, but if the majority of these vaccines worldwide is a success in driving down the effects of the pandemic, with people still using, regular precautions, mask, keeping clean, social distancing and all that, then come 2022, uh, there probably be a significant jump in certain sectors, and profitability can be gained again. Now, you might still have some profit gaining maybe in the waning end of next year, but I think 2022 is a good target year to actually really see what's going on after a whole year of the vaccines being out, and people practicing, protective measures. So when it comes to Airbnb, you have to think about long term and the transformation of what technology has done to companies in the long term for efficiency and profitability. So in my opinion, I will be looking for the stock price. I mean, a good gauge, I guess. I mean, they're saying 44 to $50 a share. I see it bumping up at first, probably even getting up to maybe 55, 60, like right out the gate. But I could see it settling too at maybe even possibly 35, between 35 and 45 a share, somewhere there next year, like within that whole year. Now, if it goes up, if the stock just keeps sitting up, then that's just optimism on investors, that people are looking at long term, like, well, eventually it's going to go up. I mean, there's a lot of stocks right now that people are pouring money into right now, even though the company might be at a loss this year. But the fact is, with everything going on and the optimism of, long term, now I'm talking about long term investors, not a short term play, but long term, that the company will be profitable long term. I mean, at least, I mean, like I said, 2022 and beyond, companies should start, you should really start seeing a lot of the transformational effects of technology, and with companies being profitable. At least you saw an accelerated portion this year. More companies are probably going to get thinner again next year, because of the transformation of these companies had to make. And like I said, the elephant in the room now is going to be real estate. With the executive order being lifted on the end of the 31st, we're going to see how the housing market is going to react, even though you have super low rates. But not just that, but also commercial industries as well. So, all right, the next stock we're going to talk about is, as you can see right here, we're going to go down, is DoorDash. Now, my personal opinion with DoorDash is DoorDash has a lot of competition. Now, Uber has Uber Eats, you got Grubhub, you got places that do their own delivery service, so to speak. So now you have a delivery food company that has probably made, not probably, has made a lot of money during these times because of the whole people had to stay home, couldn't go anywhere. Let's jump into it. DoorDash. DoorDash is the leading food delivery app provider, plans to raise about 2.8 billion, offering 33 million shares at the range of $75 to $85 each. That gives its valuation up to 32 billion on a fully diluted basis. Now, we can look at DoorDash and see that the majority of earnings that DoorDash has made this year is because of, like I said earlier, with what's going on. Now, before this, DoorDash's competition has been very stiff, and compared to its competition, like, Yum Brands and other things like that, pizza places, um, there was a chart I was looking at. I wish I would have put it up here. But as you can see, the only firm's worst TTM net operating profit after tax margins than DoorDash is Uber and Lyft. If DoorDash can't do better than a negative 12 margin in this environment, perhaps the best environment for the food delivery, then will it ever be consistently profitable? And that's the question, because the food delivery is so saturated that can DoorDash separate itself to become profitable? Almost when it comes to food delivery, a lot of places have their own some type of food delivery service, especially now with what's been going on. A lot of places have the like I said, the Grubhub and the Uber Eats. A lot of those places have been making money now because of what's going on. But what happens when things do go back to somewhat where people can go pick up their food? I mean, obviously, a lot of colleges, a lot of workspaces also helped places like DoorDash and all that before the pandemic. So when people start going back to school and this and that, and office buildings, will people be, I especially with the work from home type deal now, where I don't think a lot of companies are gonna go back to the contemporary office setting. I mean, yes, you might have some that still might do, but not as on a large scale like it is now, in my opinion. Now that you have technology where you don't really need to be in the office on a consistent basis, which direct correlates sometimes with this whole food delivery business. I mean, lunchtime people are calling, hey, I need this delivered, and stuff like that. So sometimes you just got to have just common sense and thinking, well, how is this company gonna perform after, when things go back into, but back into whatever normal people call normal, because whatever we go back into, to each person, their normal is going to be totally different. So the only competitive disadvantage that may be worse for DoorDash than low switching costs is competing with your suppliers. Before the standalone food delivery services entered the market, Yum Brands, Domino's, Papa John's delivered food to customers for free. Now, most of the time they charge for a delivery, albeit prices usually far below pure play food delivery firms. And that's another thing. If you have places that are delivering for free, but yet your service is a paid service when it comes to cutting out the middleman, because that's what's pretty much happening. Like Pizza Hut has its own pizza delivery service. But then you have DoorDash there that says, well, if, and I'm looking at it like this. All right, let's say Pizza Hut has only so many drivers, right? Let's say one night all of a sudden people just want pizzas and it's just slamming Pizza Hut. And let's say DoorDash fills that gap to help out Pizza Hut. I mean, now we're just looking at, I'm just looking contemporary now. But like, let's say if Pizza Hut says, well, you deliver this, it's free or whatever, the delivery's free, whatnot. And you have where DoorDash, where you have to pay DoorDash whatever it is plus food in order to get, the same. So you're getting, so you have two services, right? The main service gives you delivery for free, but because it's overrun and overbooked right now, you're gonna pay DoorDash probably more to have the same pizza delivered. I mean, yeah, the analogy sounds kind of ugh, but I'm just saying, looking at it that way, in what I said earlier, that's what DoorDash is competing with. Is like, well, they might if you order so much food, you're gonna get the delivery for free. Where DoorDash, you're paying a certain amount to get that food delivered. Like you're paying more money for the same food. So once again, there you go. Will the company be profitable to investors, where it can, you know, can the company show investors, is this a company worth staying with investing wise? Because it's all about profits when it comes to investors. You know what I mean? You want to be in a company that's going to be profitable for the long term, for the long haul. Hence why I think out of the two, like 75 to $85 each. I remember, is it Uber came out for 75 when it came out, $75 a share. Now look at Uber only trading at half its value when it first came out on its IPO. And that's crazy. And I think DoorDash is going to fall into um similar issues. It's going to be 75, $80 coming out of the gate, but if you wait long enough, I think DoorDash is going to drop um at least half in their shares. I don't think, in my personal opinion, I don't think DoorDash is worth 75 to $85 a share, especially when things go back to normal. I don't see it. That's just me. I really don't see it. But Airbnb, on the other hand, has a better chance long term to probably hit a target of 80 something dollars, even though the shares are 44 to $50. Like I said, next year things are still in somewhat recovery mode, with Airbnb being a worldwide thing. Even a lot of Airbnb is strictly online. Same thing for DoorDash, it is strictly online. But if you look at both companies, what's the bigger growth possibility? It's Airbnb. Just in my opinion, Airbnb has a better growth possibility than DoorDash. You know what I mean? Because Airbnb can actually gain more customers in the long run versus DoorDash, where DoorDash has to compete in just so many different areas. I mean, at the valuation that they're giving them, 75 to $85 a share, I don't see it. I mean, to me personally, in the long term, I feel Airbnb is going to be better than DoorDash. That's just me. So, all right, now we're going to talk about the few honorable mentions here. You also have Wish, Affirm, and Roblox. Now, obviously, Wish has to deal with like Amazon and stuff like that, and yeah, there's a lot of competitive space in there. Affirm is one of those, where you so many payments. You see it a lot of it now on certain sites where you can make monthly payments for an item by using this service. Now, Affirm, and I made this statement to somebody before, Visa, MasterCard, American Express, that's the type of competition a firm is dealing with, and many others, many, so can a firm stand out like the Visas, like the MasterCard, like the American Express? Can it stand out to be profitable in that sense, where you're going to have more people doing the whole, instead of using, I mean, people are going to make payments on a firm versus using their credit card right then and there and just having the same feel? I mean, that's kind of, I mean, yes, on a credit card, it's more of, if you have to pay for it whole price on your credit card and then you make monthly payments, versus these are your monthly payments and I'm going to use my credit card to make these monthly payments. You see what I mean? You have the difference in the two right there, but it's still the same category that a firm is dealing with. So I didn't do too much research in a firm, but to me, it does have its possibilities. I mean, it's kind of like so many, I mean, a lot of people do the whole payments, deals by now, especially if you don't want to pay for it all up front. You just want to make your little monthly payments or a little extra and just pay it off instead of right then and there. And so you have those type of, um, yeah, you have those two different types of thinkings when it comes to, you either pay partially or pay fully, but you're still gonna pay fully. You're still gonna pay partially if you pay for it all on the credit card, versus you pay partially up for it now, but some people still gonna use the credit card. So I mean, it depends, or bank account, or whatever it decides to take for those monthly installment payments. So I appreciate everybody being here today. Like I said, I'm just wanting to let you guys know about the IPOs that are still coming out. There's probably a few more, but these are the ones that I've been looking at, per se. But as I said before, do your own research when it comes to these IPOs. Make sure, as an investor, depending on what your strategy is. Like I said, mine is long term, 10 years plus. So it's kind of like the whole set it and forget it type of feeling. So, but in my honest opinion, just like a lot of people didn't had a bad feeling about Palantir, I think Palantir has a chance to break bread in the long term. So I bought Palantir when it was like $9 and $10 a share, somewhere there. So I planning on buying more Palantir on the dip. So same thing with Airbnb. I plan on investing in Airbnb because long term wise, Airbnb will be around regardless. If people want to make that extra side money or whatever, they're going to use their homes to make that extra money. I mean, especially if you live in a um, tourist type area, or an area where people visit a lot within a certain radius, you have a chance to make a lot of money with your home. So it's just one of those things. So appreciate y'all coming through. Y'all have a good day. Y'all stay safe. Once again, don't forget, hit that like button, subscribe, share the video. Shouts out to everybody here that's showing your boy support. Appreciate y'all. Y'all have a good day.